Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the Japanese yen. It was really the difficult choice what particular currency pair to choose for weekly research, because if on the euro currency we mostly have discussed in the recent two sessions overall situation, but on the New Zealand dollars really interesting setup right now is forming on the Japanese yen. So every major currency pair could show some really nice setups in the coming week. But since we have discussed the Japanese yen previously and has formed some analysis already, I think that today is a nice moment to update our view on the Japanese yen. Besides, very important moment has happened. It not quite obvious if you will take a look just on the chart, but when you understand why this plunge that we have got on Friday is very important and how it relates to recent Bank of Japan steps to make the Japanese yen weaker, you will understand why this really very important moment. So first of all, I would like to start from the daily chart. In the long-term perspective, guys, on the monthly, weekly chart, as we said, as fundamental and technically, we have the bearish view on the Japanese yen. So here, guys, when I talk on some bullish or bearish view, I mean the United States dollar to Japanese yen currency pair. This is not so. When I say here that I have the bearish view on the Japanese yen, it means that I have the bearish view on this currency pair, but not on the Japanese yen directly. On the Japanese yen, it will be the bullish view. So we have the bearish view on the Japanese yen chart. So on monthly and weekly picture, as fundamental as technically. But as you can see on the daily chart, market now stands at the support. So this is neckline of our hand shoulders pattern. On the December, the last days of the December, when I have prepared the previous update, we said the market stands right here, but by some reasons market should show upward retracement here. This really has happened, but initially we have suggested that retracement should stop somewhere in this area. This continuation has followed when Mr. Kuroda has announced the unprecedented steps on weakening of the Japanese yen. So they have turned the rate in the negative area, and that has led to additional leg to the upside. We can't, of course, foresee this. So retracement should stop here if no negative rates have been announced, and probably market turned down. But this has happened, and market has shown another leg up. Within the last week, you can see this was a really dramatic drop the whole week to the downside. Especially take a look that this action stands on Friday, but this action was the whole week, whole previous week. It started on Monday, Tuesday, Wednesday, Thursday, whole week market dropped lower. And right now, market stands at the support. Trend has turned bearish. Market stands at the neckline and daily oversold. It means that in the beginning of the week, we could count on some minor retracement up. I am speaking minor because the major retracement already has happened. We do not expect something of that sort. We think that retracement could reach an area this range. So this is weekly pivot point, 1840 area approximately, and take a look, confidence resistance. 1890, 9060 area. So that will be enough to show respect to this support area. And after that, market theoretically should continue to move lower. This is our scenario, and we will be watching for how the scenario will develop. Now we're coming to the major moment that has happened last week. So on first glance, this drop down looks like the just simple, yes, this is fast and strong thrust, strong plunge down, but strong drop. But this is not just strong drop, guys. This is the breaking of the efforts of the Bank of Japan to make Japanese yen weaken. Why? Because when the Bank of Japan announced the shifting to the negative rate, this was just the last tool that it had to impact somehow on the value of the Japanese yen. And when this rally has happened, we said, don't be hurry, wait for the reaction. This is just first reaction on the unexpected news, but how market will assess this step, whether it will believe it or not. And take a look that within the last week, market has erased all rally that has happened on an announcement on the negative rates. So it means that the quantitative easing program that Bank of Japan now has doesn't bring any significant changes in the value of the Japanese yen. Turning to the negative rate also doesn't bring any changes. So because investors do not believe in the ability of the Bank of Japan to impact somehow on the value of the Japanese yen. So they already have done everything. All that they could do is just to put rates to the more negative area or increase the quantitative easing program. That's all that they could do. But as you can see, this not brings any relief to the Japanese yen strength. So Japanese yen doesn't drop. It's become stronger as a currency. So it leads us to two major conclusions. First of all, this makes very important bearish patterns that we have on the monthly chart, on the weekly chart. And this tells that probably Japanese yen will continue to drop lower. Also, guys, when you're taking into consideration the geopolitical situation right now in the world and it become worse day by day, we think that, and the Japanese yen, as you know, that treated usually as a safe haven currency, it's very difficult to suggest what else Bank of Japan could do to become stronger than the overall geopolitical situation and the increasing of the investors for demand for the safe haven assets. Just take a look at the gold market. We've got a relatively positive non-farm payrolls release, but the gold market has skyrocketed again. So gold has risen on the background of the rising United States dollar. It means that it's not just some technical action. This is really putting money of the investors in the gold. The Japanese yen is a safe haven currency. That's why we see very shy results of the Bank of Japan to somehow impact on the weakness of the Japanese yen and to trigger the weakness of the Japanese yen. And we think that this will continue further. Second, what in fact Bank of Japan could do? I see only one tool that Bank of Japan could apply, and this tool is direct interventions on the Japanese yen. So this is the only thing that they could place as the National Bank of the Switzerland. They could put the floor or the sale for the Japanese yen directly, and said that they will not allow the Japanese yen to drop any further. So this is also possible. But first, I think that they will start some interventions on the Japanese yen market because the fiscal tools already has been housed. So they have nothing yet to apply here. So now let's turn to the technical picture. As we said, we expect some retracement to the upside. After that, we expect the drop lower approximately in an area around 115, 115 area. So if you will read our weekly research, you will see that there are some other targets stand. But on the daily chart, this will be the weekly pivot support one. It also stands in this area. This is the next target in the coming week. So Since we think about the possible retracement up, the market probably should form some kind of a reversal pattern here to trigger it. So if you'll take a look at the hourly chart, you'll see the market has formed a butterfly. And maybe this butterfly will turn to some head and shoulders pattern, for example, with a flat bottom. This is also possible, theoretically. Maybe some other pattern will be formed. It's not, right now it's difficult to predict, but whatever pattern will be formed, we do not call you to trade this on the bullish side of the market, because plunge down was really significant, and this will be too risky to take the long position here. We are mostly interested with this upward retracement only because it could give us the better entry point when taking the short position. That's why we do not call you for trading. You could try it if you understand the risk, you have the experience to do this. We can't forbid you, but in relation to current video research, we speak on retracement only as some kind of the tool, some kind of the development of the situation that will be important for us, just because it could lead us to the levels that we're interested in for taking the short position, particularly speaking to this area. So that's our current view on the Japanese yen.